Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is the kickstart video the day after the Federal Reserve cut rates by 50 basis points. And as Adam points out, the Fed initiating that Fed put, that is putting a floor under things like the U.S. stock market. And we're seeing stocks move sharply higher in trading here today, with the Dow Industrial Average now up 446 points, or implied by the futures. The NASDAQ futures are implying a gain of 403 points, and the S&P index is up around 90 points, which would, for the Dow and the S&P, would take those indices close or above their all-time record highs, which we just reached yesterday. So with that said, I'm going to take a look at the three major currency pairs: the euro versus US dollar, the dollar versus yen, sterling versus US dollar, from a technical perspective, and see where we're at. So let's get started. Now, I talk about the Fed, but we also had initial jobless claims come out with stronger than expected data this morning, and that has helped to push the U.S. dollar a little bit to the upside here over the last few minutes. The euro has moved to the downside. When the euro moves to the downside, of course, the euro-U.S. dollar moves to the downside. The dollar moves higher. And already we've had this huge volatile trading day, both today and yesterday, as a matter of fact. So let's kind of try to make sense of it. In yesterday's trade, we saw the euro move higher initially, and we moved up to this level right here, 1.18897. That happened to correspond roughly with this high right here, ahead of the double tops right here. So it sort of made sense. Let's not go to new highs at the 112 level. Let's go to the level before that. It was already a pretty decent move to the upside. We sort of rotated all the way back to the downside before rebounding a little bit into the close and trading in the Asian session. We continued that move to the downside. We took the price below the 200-hour moving average, a target on our downside. If we looked at the video yesterday at this time, and the price did move below those levels, but you can see it was short-lived, and it rotated back to the upside and just run. It went and we moved back above the 1.1172 level, which happened to correspond with this high right here, which was another target, and then we rotated back to the downside after the initial jobless claims data here today. So with all its ups and downs, it is frustrating for a trader, but it is what it is, and the risk increases at certain times. And right now we're in the point of transition from going from the Fed being steady for a while after raising rates for a long while, and now yields moving lower as the Fed recalibrates the Fed funds rate more toward inflation after it's moved to the downside. So, we can only hope that the technicals do their job. And so from a technical perspective, the 100-hour moving average 1.1117 1.1117 will be the next target on the downside, where you would expect to see some support buying against that level if it falls below that level, and indeed did yesterday and did today. We head down toward this swing area right through here between 1.10976 and 1.1104, and then we start to look toward the 200-hour moving average down here. That's a downside bias. Now, if we start to move back above the 1.1140 level, and you can see the importance of that level going back in time through here and here, where the market here found that level as a support or resistance. We broke above it here on employment day, and then used the level as a resistance right here. And trading this week, we did try to use this level as resistance before the Fed decision yesterday, and push the price to the upside and bend back to the downside. So this area is also a key. Get above that level opens the door for the upper end of this this extreme that we've seen now a few breaks to the upside, including all these squared boxes right through here where the price is broken above that level. So be aware of that level on the top side. All right, let's take a look at the dollar versus yen next, and look at the hourly chart. Again, volatile price action off the Fed decision. Initially, the dollar yen moved to the downside. We broke through the 141.71 level, which happened to be this low right here. The other key level on this chart, which I outlined in my video yesterday, was this 142.48 level. Let's call it 140.25 level. And as you can see on the downside move, the price came in between those two extremes right through here. Not only was the 140.25 level important in that there was a low right here, and then we broke below it and used that level as high right here, as a resistance right here, broke above it, used it as support here before moving to the upside. But it also had other implications or importance from the daily chart, in that if you were to go back to this point right here, this is the end of December low. Where did that level come in? 140.248. So that was a key level as well. And again, going back to our hourly chart, that was this line right here. So we held the decent end of December 2023 low, rotated back to the upside. We did get above this swing area, and we are currently trying to retest that level after moving above it and failing. So get above 143.67, and we have traders looking toward the 61.8% retracement, probably after getting through this high right here, 61.8 of the last move to the downside here. So the dollar yen's trying to push back to the upside as yields move higher after the initial jobs claims and the market adjust to dynamics from that. Let's take a look at the sterling versus US dollar, and this is on the hourly chart. 1.32977. That was a high price that we saw in trading yesterday. What was the significance of that? Well, if we go back to the daily chart and you take a look at this high right here, it came in at 1.32977. So we moved right up to that level and found willing sellers against that level. So keep that in mind. Now keep that level in mind. Also, let's keep this higher level in mind, 1.33581, and we'll go back to our hourly chart. 1.3358 level is right around here. Change that to 581, I guess. And so now that we have our targets in there, so here's our 97 level right here. Here's our 581 level right here, up here, and that's going to be the target area on the top side that we need to get to and through on the top side. Now we've just moved into that level, and we are seeing the rotation back to the downside after the initial jobless claims. Moving back toward this swing area here between 1.3221 and 1.3230. Move below that level and have traders looking toward the 38.2% retracement of the last move higher, which is also somewhat corresponding with the rising 100-hour moving average here near 1.3194-ish type area. So 132.21, 132.30, get below that level, and we head down toward this level, hold that level, and we'll probably move back toward the high price of going back here. If we get above that level, and we start to look at that swing area off the daily chart, which is a big target between the 1.3297 and 1.33581. So with all that said, lots of volatility in the market here. There's lots of, we got the Fed put on the downside for the things like the stock market and maybe lower dollar, but then we have the economy and the thought that it's really not that bad given the employment situation that we see from the initial jobless claims, at least in trading here today. So we'll see how it all pans out. The stock market certainly should be an interesting one today. My name is Greg McGlosky. Good fortune to trading. Bye-bye now.